Okay, folks, we are live. Welcome to Sunday night's stock charts live. And we have the opening futures action here. And we are seeing a move up higher. No new daily or weekly high yet. We closed out the week just off the highs of the week. And we'll be watching this very, very closely. We have a lot to go over. And by the way, these are 5-minute charts. Testing the 21 period moving average, 5-minute time frame, 21 period moving average in orange. That's the EMA, not the SMA. A little bit of selling coming in here, not too much. We'll let this settle down. Let's say hello to folks here. How's the audio? Can I get an audio check? I want to make sure I don't have poor audio. I look okay on this end. Yeah, I look okay. All right. Mike C., welcome. Trader Isaac, good evening all. Same question last week. Will gold pull back? I'll talk about gold a little bit in a while. We're going to go over it on the futures in a moment. But I think that we will. That doesn't mean that we're not going up higher first. Right now, tonight's going to be a lot about the psychology of the market. And I want to, before I begin, thank you, Sean, Mike, about the audio. Appreciate that. If you'll notice, my glasses are kind of like this. My arm broke off today. So if you're wondering, hey, what's wrong with this guy's glasses? They're broken. So that's why. Okay. Thanks, Mike. Well, a lot about psychology today. We're in a very, very interesting time. Probably one of the most interesting times I have been trading, to be honest with you. I'm dreaming of a gold Christmas. Let's go with a big stack of American Gold Eagles under the tree. Good for you. Yes. Agree. Do you think drone attacks? They can. I've been talking about this. You had a couple of weeks ago. Hey, Jeff. You had a couple of weeks ago. You had that Israeli tanker in the Suez Canal that was captured by the Houthis. Then last week, again, we had more tankers under attack. This week, more of them. So now we have a trend. It really didn't do anything to oil in the short term. I don't think just yet it's going to. I think there needs to be something. If you start seeing something happening in the Straits of Hormuz, anywhere around that vicinity, different story. But if you're talking about the Red Sea, not really. Not really. If you start seeing missile attacks by the Houthis on the Saudi oil infrastructure, like you saw about a year and a half ago, different story. But right now, you may get a blip up, but I think it fades because oil did re-break out last week. Energy stocks broke down. So we'll see. We'll go to oil in a moment. You're seeing E-minis now flat on the session. Actually, mini watch list, Firm, CRM, and Amazon. Good list. All right, let's continue. Let's go on to, let's stick with equities, mid caps. Mid caps have been in fuego, and there's more room to run here. But we are up, behaving relatively better than the S&P 500. Where's my small caps? I didn't bring up my small caps. Where are they? Here we go. Small caps. They're up as well. So in the early going here, we're seeing a flat S&P 500, Strength in the small caps, mid caps. Where's the NQ? The NQ has been lagging of late. Wow, and they're down. They're still lagging. This is a pretty measurable move lower here. I mean, you smashed through multiple Fibonacci's. And here's the last one, the 89 period that's about to get tested. So what I want to do here is this. I want to know if we break this support level, because what that'll mean is that we have a short-term break of trend on the NQ. Okay, so that's set. Back to the 5-minute chart. So equity is a mixed bag today. A good amount of weakness here on the NASDAQ. I mean, we're only down fractionally, but when I see all of these support levels get broken like that, that's kind of a tell. Let's check in with the US dollar. What the hell did I do? Okay, the dollar continues to weaken up here. This is a pretty nasty open for the dollar. Now, the euro on the week last week, very poor, bearish key reversal bar. Yen of all currencies was actually strong. Here's the euro opening up. Yen, strong, still very, very strong. Price action here on the yen, very surprising. Now, segueing over to gold, and we'll talk about silver next. Gold up another 260 the ounce. We've already had a new weekly higher high, intra-week high versus last week. So the print is in. We printed 2,098 the ounce. Last week, the high was, let me make sure that this is set accurately. Yep, and it is. Last week's high was 2095.70. So we have a new print, new weekly higher high on gold. The strength is pretty good here. A little bit of a reversal bar at the open. This is just implying that we're off the highs of the session, but still holding above these stacks of moving averages. So the probability of continuation higher highs are very good here. Has gold come a long way? Yes. Can it pull back? Yes. Nothing goes up in a straight line. But this is still looking very, very strong. Let's check in with silver. Silver up spot 1.3%. Again, off of session highs. Even with the dollar, which is opened lower, and yen and euro up. Let's segue over into commodities. Oil. Oil up over a 0.5 percentage point. We're going to need to keep an eye on this. Nat gas. Down, oh, Jesus Christ. Down another 3.5%. My God. This is a crash in natural gas. The month of December is one of the worst months out of the year for nat gas. Unfortunately, I'm positioned in this with naked puts and some call options, which, you know, a month ago, it appeared as though we were ready to break out on a weekly time frame. Instead, they broke it down. And there's been no looking back. It's been one-sided trade day after day to the downside. So there's going to be a rip your face off rally. I'm probably going to be adding to positions this coming week. I mean, there's got to be some sort of a rally at some point in time. So we're going to be watching this closely. A lot of blood in the streets here in the nat gas world. But it's not time to get long yet. I would wait. Back to the 5-minute. Now moving on to, what did I skip? I don't think I skipped anything. Let's go check in with, we're going to go to a weekly chart and give an overhead view of the commodity arena. Wow. This is still nat gas weekly chart. And this is the opening of the week. So we have a new weekly lower low. We're pretty extended beyond the 5-period exponential moving average. So I think that we're going to get a rally up to that mark fairly soon. Now, taking a look at copper prices, I spent some time over the weekend taking a look at some commodities that were left for dead, and one of them was copper. And you can see here that copper has been consolidating and is now broken out. So we've entered that phase where the commodity complex is beginning to really ramp up and beginning to move up higher. There's only one problem, and I'm going to ask you to remember this chart. One problem. This is inflation. It's the very essence of inflation. Oil prices moving up, copper prices moving up. It's a sign of, at least in the world of copper, it's a sign of growth. Nat gas is not showing that. It's giving you the inverse view. I just think that in dollar terms, because the dollar is dropping so much now, that these commodities, which are priced in US dollars, are beginning to move up higher simply because the dollar is weakening. I don't think it's a demand thing, and I could be wrong on that. Home heating oil, very weak. Good for me. Let's check in with live cattle, as we do each week. We're dedicated to our protein, despite what the Economic Forum wants us to do, the World Economic Forum. Cattle prices are falling apart here. And this is a pretty significant move down. We've broken trend. And we're going lower. So much for the World Economic Forum. Let's check in with agriculture. Sorry about that. Let's okay. Corn prices, bullish, key reversal, and a breakout last week. Watch the DBA this week. That's an agriculture ETF. And we may get a bid there if the other ag names begin to break out as well. Soybeans, no such horrible price action, in fact. Very, very poor price action. Look at these topping tails. We're probably going lower there. Wheat prices, very similar to corn in that we broke out last week. Very bullish price action on wheat, corn, not so much on soybeans. Okay. Moving on to, what else do we need to go over here? Let's take a look at yields. The 10-year is doing what? I see. It's moving up. Not a very big move here. Well, NQ is now down 0.22%. Vol making a little bit of a move. Let's check in with the ES again, see what they're doing. ES now down. This is not a very strong move. Actually, that's the TNX. It's regular hours trade. Here's a 10-year real time. And this is probably what's spooking the market a little bit, a gap up higher on the 10-year. You know, we're nearing support levels. I think 4.16 on the 10-year is a support level. So I think that this is just early stage jitters due to the gap up in yields. Not much to be worried about there. All right, let's say hello to folks that just joined in. Mr. Pete, welcome. NVIDIA always on my watch list with AI sentiment, scalping the call options. What are you buying them or you selling them, Mike? And they're not going to like it, but I have to ask you about Boyle. You know, I own my decisions, so it's okay. And I come out. I didn't have to talk about nat gas, but I did because you know sometimes you pick a stinker. Nat gas is very difficult to trade. We're not huge in the trade, so I didn't bet the house on it. I never would, or any other trade for that matter. But right now, the way I need to think about it is tactically. So, you know, as a contrarian, when we take a look at Boyle, when we take a look at nat gas, it's extremely oversold. Boyle has no historical support level down below. So you really can't go by support levels there. You can take a look at UNG. I don't even know if UNG has historical support below, to be honest with you. And that is the ETF for nat gas. And it doesn't. You know, we could take a look at the continuous contract. But I think these are all-time lows on. Oh, no, they're not. It's not. Why wouldn't UNG show historical support below? So I think that we're coming down to 2.5 on the continuous contract. Where are we now? I wouldn't consider. We're about 20 cents, 22 cents off of that low. So what's the game plan? Well, we know we have a commodity that's pretty oversold now. It's hated. That doesn't mean that because we're contrarians, we go running right in. What we want to do is we want to wait for historical support to get tested. And I would look to add to a position, a long position, but I would sell that strength. I would sell it because this is a very bearish chart. I think that ultimately we're probably going to go down and retest these lows. But for the reason that I think that we're heading into recession. And you asked about the Boyle trade. I wouldn't watch Boyle per se as much as I would watch the continuous contract, load up more to the long side, and then on any rally up to 21 period exponential moving average, I would just get out. Just call it a day. I'm not going to hope when I should fear, and we'll leave it at that. Bitcoin related stocks, Mara. Yeah, they began to move. Coinbase really began to move. Mara, well, not Mara. I didn't look at Mara. Riot, I saw was breaking out last week. Okay. Hey, Jody. Welcome. Okay. Amazon definitely on the watch list for possible application of bullish-minded call options. Okay. I'm watching ARM this week. Okay. Everybody's busy. Everybody's bullish. Buying. Bob, any opinion on Argentina stocks like ARGT? Argentina. Let's take a look. You know what? I'm going to put it on the watch list. ARGT, that's an ETF. I'm not familiar with it. I know Wendy wants 3M, ARGT. Okay, we'll take a look at them in a moment. Long nat gas, not loving it, but not alone. The high short interest in decades. So eventually, yeah, there'll be a strong counter trend rally, no doubt about it. So I'm wondering if you ever look at charts. Nah, X's and O's. Nah, I'm not knocking it. I just don't find it as interesting as candlestick charting. Just my thing. Can't help you with the question, pal. I don't know. I would go to YouTube, get some ideas from there. Gold is up to 2096. No shock. Let's go back, take a look at it. It's really moving now. Wow. Wow. Explosive move. Don't be surprised if this goes up $100. Don't be surprised. Fund managers are so underweight gold right now and silver. Don't be surprised. It just goes shooting up. We have call options on GLD, which is good for us. Not as big of a position as I had wanted. I haven't wanted to chase it, but this is looking pretty spectacular. Up nearly 1.5% on the session. Now, Bitcoin as well. We're going to talk about more on a macro view in a moment. But Bitcoin has been having a really gangbusters rally as well. And it's really not correlated with gold. Where is the symbol? Wow. Bitcoin up over 3%, 1,240 the coin. Wow. Wow. I mean, we've seen moves like this before. We're now above 40,000 on Bitcoin, but we're really, something's happening here. The markets are saying no mas. They're saying, the dollar is going to the tank. Money's leaving the banking system, the Swift banking system, not Swiss, but the Swift banking system, and heading out to Bitcoin. Also, you had a judge that came down on the SEC threatening to charge them with a felonious action for trying to stop Bitcoin or whatever crypto they were trying to regulate. So that news, I'm sure, has helped sparking a rally in Bitcoin right now. That article is off of Zero Hedge. Let me see if I have it up here. Gary Gensler, I think, is the defendant on that action. And he's the guy in charge here, this guy, this Bond villain. Judge slams SEC for materially false deception in crypto case, threatens to sanction agency. I'll throw this article in the chat box. Okay, so let's get to it. Let's talk about the coming week. A lot of exciting action. Before we go off to the charts I want to go over, I want to check back in with equities to see how they're holding up with the action in gold. I thought I turned that sound off. So we have not much of a negative reaction here. E-minis have come off their lows a bit. NASDAQ has come off their lows. So not a lot of follow through here to the downside. Now, as I always like to start off with the week, I always like to point out the corruption with the World Economic Forum, Washington, D.C., the Davos crew. So this is off of X. Private jets getting ready to leave for climate change conference in Dubai are frozen on the runway in Munich as 60% of Europe is now covered in snow. Let me say this again. Rich people getting ready to board their gas-guzzling jets to fly to climate change, formerly known as global warming conference, can't leave because their planes are covered in the freezing snow. Wallow in that irony. And also off of Zero Hedge, something I have been shouting at is now beginning to get a little bit more traction. Every leader associated with the World Economic Forum should be immediately removed from all positions of power and prosecuted for treason. I publish this stuff all the time, and what I want to make a trending is military tribunals. There you go. Okay, so fingers crossed. Hopefully we'll see some perp walks. Hillary Clinton, number one. Barack Obama. All right, coming up this week in terms of economic data, we have some, it's going to be a busy week. On Monday, we kick it off with factory orders. They're expecting a negative read. If it comes out bad, what we're seeing is that when negative news comes out now, it's not met with the same enthusiasm as it once was, because usually on Wall Street, bad news is good news. But right now, when you get bad news, the market goes, are we at that? It's the proverbial last straw on the camel's back. Is this the last piece of bad news that's going to break that back? So I think that the street is watching for telltale signs that the economy is finally giving way. But it seems as if that ultimately they're buying these dips. So I'll give you my thoughts on the market in a moment. We're going to get ADP. That means that this is the non-farm payrolls week, also known as the Pimp Mac Daddy of all economic dates reports coming out this week. First comes on Wednesday, ADP. We get U.S. productivity, very important. Thursday, we always get initial jobless claims. Then on Friday, we get this is formerly known as non-farm payrolls. Watch out for this number here, U.S. average hourly earnings. If this beats, that's a problem for the equity market. If it comes in lower, stocks will rally. Why? Because that's what the Federal Reserve wants. They want the average guy, gal, making less, unemployed. That way they can feel good that they've beaten inflation, because they can't go to the source of inflation, which is the federal government, and tell them to stop spending. They don't have the backbone. So what do they need to do? They need to tell you you're spending too much, even though they gave you the printed dollars to spend with. It's your fault, not their fault. It's not the federal government's fault. It's our fault. Go figure. We didn't go live on Thursday, so I didn't go over the Federal Reserve's balance sheet as we usually do on a Thursday. And last week, we continued to see lower lows on the Federal Reserve's balance sheet. The one observation I'm making here is that the rate of change of the decline in the Federal Reserve's balance sheet is beginning to lighten up. It's not as aggressive as it once was. What is that? Well, it's not necessarily a pseudo or a quasi rate cut, but it's less of a dampening of credit out there. So once you begin to see this hook up, then you're going to see equities really begin to ramp up higher short term. As for the probabilities of a rate hike moving forward, 0 for December. For January, wow, this came down. Now they're beginning to price in. Wow, they've modified this. The last time I looked at this, which was probably on Wednesday. We were at about 1 week ago, we were at about 80, near 88% probability of a pause. A month ago, it was 91.2. Now, the probability of a pause is only 81.7. What's growing? This. The probability of a cut was 0% 1 month ago, now 16.1%. And when you go out to March, look up here, this continues to grow. 70.8% probability of an ease. 1 month ago, this was zero. It was zero. Going out to May, probability of an ease is 85.3. 1 month ago, zero. 1 week ago, going down to 450 or 475. That's a half basis point cut. 0% probability. So the odds are stacking up that the Federal Reserve is going to be cutting rates a lot quicker than what anybody expected. And the way it's looking here, the way that the probabilities are setting up, that the probability of not a quarter point, but a half basis point cut is growing. I'm not saying it's a probability. I'm just saying now it's a possibility. Whereas a month ago, I would have said no way. But it's growing. For giggles, I want to go out to, wow, look at this. Out to June, 99, nearly 100% probability of an ease going out to June. July, 99.9% probability. So what they're telling you is that we're not going to get one. We're getting a bunch of rate cuts. So the question is, why? We're going to go to that. So this is out of the Atlanta Federal Reserve. They track the GDP reports, what they're expecting. And usually they start off high and they revise down, really down. They start off real high and they revise down. And you can see the original forecast for Q4 was about 2.4, 2.5. Now it's about 1.5. So they're in line right now with the consensus on Wall Street. So what this is saying is that expectations of continued GDP growth, which are for the most part, if you go back to that last GDP report that we had, I was listening to Peter Schiff. And what he did was he went into the numbers and he backed out government spending. And if you backed out government spending out of that GDP report, the private sector saw a contraction. The only reason why we have 5.2% GDP growth on a year-on-year basis is because of government spending. More debt being printed. Indicators of restaurant activity continue to show signs of weakness in the U.S. Interesting, it has been almost perfectly correlated with the Federal Reserve raising rates. And here's the chart. So you can see restaurants getting destroyed. More credit card debt is not the solution here. And this is why usually after you get your Federal Reserve rate cuts, one of the first groups to emerge after the sell-off are what? Your dining establishments. Those are the first ones that usually begin to lift up because the consumer all of a sudden has more cash to go out and spend at restaurants. This is from Liz Young over at SoFi. Against expectations for a rebound, the ISM manufacturing PMI remained at 46.7 in November, 3.3 relative to the neutral value of 50. Basically, what she's saying here is that the neutral zone, the neutral line is 50. If you get a read below 50, that's a sign of contraction on the ISM manufacturing PMI. A read above 50 is a sign of expansion. And you can see that the manufacturing sector has been in contraction for a long, long time, basically a recession. Now, this is out of China. You got to love this. This is not AI. These are ghost cities being destroyed. China's second largest real estate developer, Evergrande, faces dissolution on bankruptcy court tomorrow, December the 4th. Watch this. There is $1 trillion worth of debt being held by global banks associated with Evergrande. Global banks hold nearly $1 trillion in bonds and loans from Evergrande RE real estate company and their failed electric vehicles division. The bondholders on December the 4th don't accept EG's poor solution of taking equity. They want the bondholders to take equity. Take equity in insolvent company. Evergrande will be formally dissolved and all remaining assets of the heavily indebted real estate developer will be sold off en masse, leaving as little as 0 to 5% repayments to debtors. Just effing die already, you Ponzi scheme POS company. Incredible. That's our global competitor. That's why I've said mainland China, to me, I've said this for years now, is uninvestable. I could not put one single penny, not even into an emerging market fund that has exposure to China. None, not one single penny. Hey, Pat, welcome. Taking out of Rivian options on Friday. Did you make money? Hopefully you did. Oh, you did. Nice. Very nice. Awesome. Nah, $1 trillion? Nah. It really depends. You know, I shouldn't be dismissive, you know, because it's always like a domino effect. So it's $1 trillion is nothing on the global spectrum, but it's if you have one institution that has exposure to Evergrande and that institution goes down, well, that's a problem, because the question then becomes, in the derivatives market, that's like $300 trillion. In the derivatives market, they're going to say, okay, that company that just went down, who do they have counterparty risk to? Who's got to take a loss on the derivatives that they were holding? And that's what gets everybody. Until that question's answered, that's when everybody goes running for the hills, because they don't know what they have. Nobody knows what's in these packages except for the people that put them together. So the initial knee-jerk reaction, yes, would be to sell if you have an institution that goes down. I was just about to put my hat on. I wanted to put my glasses on. Okay, let's talk about the Dow Jones Industrial Average. This is all for Sven Henrik. Following the positive RSI divergence low in October and successfully saving the larger trend back test, DJIA, Dow Jones Industrial Average, now showing the highest RSI reading since 2017. And we're approaching near all-time record highs. We have 52-week highs, and it looks as though we are going higher. Now, the one thing I have an issue with his, I'm going to bring up a tweet in a moment. Here's your rising uptrend channel on the Dow Jones Industrial Average. But what he has here is that we're already bumping up again. No, I guess not. We do have room to run here. Dow Jones until before 1929 chart 3 month. Oh, he's looking at a 3 month view. I see. I see what he's doing. He's looking at a quarterly view of the Dow Jones Industrial Average. I see what he's doing here. Look at this touch resistance line, and then look for where the support line. Much space to fall down, and short space to move higher. I don't know if I agree with this. I like his work, but I think that the Dow Jones can move up higher here. I still see room on this chart for us to move up higher. You know, we backed off after we tapped that upper band of resistance on a quarterly chart. We backed off. I'm not sure what moving averages is using here. Maybe a 150 period and a 50 period. but we bounced off of those levels. Now I think that we're consolidating over the past few quarters, and we're getting ready for a move up higher. So I think that this is a very, very bullish chart. I think that we can move up higher. I think the probability is very high that we do move up higher here, because you've already got the technology sector, the XLK, at all-time record highs. The NASDAQ hasn't broken out yet, but technology stocks that are in this bucket, they have. Now, other reasons why the equity market can continue to rally. I mean, on August the 1st of 2023, Fitch came out and downgraded U.S. debt. On November the 16th, Moody's came out and downgraded U.S. debt. Let's take a look what's happened since November the 16th. You would have thought that bond yields would have needed to go higher. They didn't. Here is the 16th. On that day, yields actually fell, and they continued to fall. The question is why? Why would they fall when our debt was downgraded? It's pretty simple. Money started rotating into the bond market because people are worried about us going into recession. The US dollar. This is, by the way, before I leave this one chart, this is a probable reason of why the equity market can continue to move higher. Even if we stay where we're at current and just bounce around, equities can move up higher. Remember what the equity markets have done over the past year and a half. They've trimmed down their workforce. They're pretty lean. So any loss that they would have made up for having to pay out more on their debt, well, they've cut headcounts. Now that yields have come down a bit, that will allow for multiple expansion, if in fact their earnings don't degrade. Also, the US dollar tanking is allowing the Dow Jones Industrial Average, which is, they're mainly exporters. They export goods out of the country, and that is allowing for their goods to become more affordable. Weak dollar, bullish for exporters, manufacturers. Now, I did a bit of analysis on Bitcoin. I own Bitcoin, dollar cost averaging every Monday. In fact, I kept a cash account on the side in my Bitcoin account, and I dumped a whole bunch of cash in, not a whole bunch. I dumped some cash in addition to my dollar cost averaging into Bitcoin about a week ago. And Bitcoin, let's update this now, on the month is now up $2,244 and only moving up higher. Now, what I want to have you watch here is that the correlation between the S&P 500 and Bitcoin is about 77%. They're tightly correlated. So I think that as goes Bitcoin, as goes the S&P 500, they're both going to go running up together. I think that we could quite possibly see a melt up in both of these names. Now, what I want to also take a look at is Bitcoin relative to the consumer price index. Anytime now. Let me see if I can get that up here. Okay, so you can see that there's not much of a correlation between CPI, and this is the headline number, not the core. There's not much relationship between CPI and Bitcoin. However, it is improving. and the CPI has not taken much of a dip. So a lot of the talking heads out there, the last PCE report, the last CPI report, they wanted to claim victory over inflation. You're really not seeing it per se. In fact, with oil prices, you saw a reversal last week, higher. Will that last? Well, I don't know, because the energy stocks, which are tightly correlated, they did not rally with oil. So that leaves me a little bit of question mark as to whether or not oil is going to continue to rally. Natural gas indicating that we have not inflationary. We have recessionary pressures on the market. And usually when you go into recession, you get a bout of deflation. So we're seeing that already when you take a look at gasoline prices. When you take a look at gasoline prices on a weekly chart, I mean, this is a very, very basket case chart. It's a head and shoulders setup, left shoulder, head, right shoulder. And last week, we were pounded down on gasoline prices. Great for the consumer. You can see we broke trend here. And gasoline prices under a lot of pressure. So the one thing that we want to do is, as we're watching gold rip up higher right now, right? Let's check in with gold. Gold now up, wow, up nearly $50 the ounce. Nice. And this is the early stages. So what we're going to be looking for with gold is a nasty correction. I'm not saying that we were going to break recent breakout points, meaning the $2,000 mark. I think that we could head up a lot higher here. And I think that the next pullback could be a retest of the breakout point at $2,000 per share. Why? It's because when you get a correction or a recession in the United States, let's go back to 2006, 2007, you got a pullback, but gold was able to break out. You go back to 2020, you got a nasty pullback in the price of gold. So if we get a bit of deflation that hits us on U.S. soil and that sends the dollar lower, well, then you could expect that gold is probably going to get a pullback as well, along with the gold stocks. Now, right now, I'm extremely bullish on it, and I expect it to go up a lot higher, but we are going to be on the lookout for a deflationary bout coming up fairly soon. Now, I remain bullish on the equity markets, but Sven brought this to my attention. All leaves are brown and all the bears are gone. And what this is the sentiment survey, bulls, bears sentiment survey. And here's the exact same chart right here. And you can see that there are no bears out there. I mean, the sentiment is extremely bullish. Does that mean that we can't continue up higher? Sure we can. Sure we can. But it's letting you know that, you know what, there's a little bit of frothiness out there in terms of the appetite for equities for the S&P 500. And one thing that I want to go back and take a look at is the daily chart of the Dow Jones and the RSI. Yeah, we're going to need a pullback here. 80 RSI on the Dow Jones Industrial Average. I don't know the last time we saw that. Let's go back 5 years. In at least the past 5 years, we haven't seen it. We have to go all the way back to 2018, January of 2018, to be as overbought on RSI as we are right now. That does not mean we're not continuing to move up higher here, but we should be expecting, it's crazy not to expect a pullback of some sort and then a continuation move up higher. The put-call ratio. We can continue higher on the equity markets. This is historically low. However, when you take a look at the S&P 500 overlaid, we can continue to press up higher in the S&P 500. It's when you get down here in this zone here, spot 6.5 in that range, spot 7.3. When you get down to that range, that's pretty excessive in terms of call buying relative to puts. And that means this is overzealousness in the market. There's FOMO going on. The amateur money's coming in. They're putting their money to work in call options, probably short-term call options. And there's a lot of speculation going on. And eventually they get taken to the woodshed like they always do. Now, I've given out a lot of reasons why we should be bullish, because we have a lot of bearish stuff going on in the economy. The Federal Reserve is going to cut rates. What we want to focus on here as well is the yield curve. I'm going to come back to this because I want to touch upon this first. And this is kind of what, in one chart, I talk about constantly. And this is the average S&P 500 returns around recessionary bear market since 1871. Curve steepens. That's the yield curve. We're going to go to that in a moment. Credit tightens. We are here. We're there, right? Then we get the Federal Reserve first rate cut. Equities usually after the first rate cut drop like a rock. They don't rally. They don't rally. They eventually will rally as soon as the Federal Reserve gets to equilibrium on the number of rate cuts they need to do. Once there's enough liquidity in the markets, then the equity markets are probably going to have a massive crash up, and probably going to be an inflationary crash up like the likes of which you've never seen before. And I think it was Trader Isaac that brought up Argentina. Look at Argentina's stock market. Just take one look. What was that symbol he threw out there? ARGT. I've never looked at this, so I don't know what to expect here. I'm hoping it's what I'm looking for. I'm going to type in Argentina first. We'll go with it. This is a value index. Let's go to a monthly view. All right. So consumer price inflation averaged 38.8% in 10 years to 2022 in Argentina. I repeat, CPI averaged nearly 40% in 10 years in Argentina. But look at their stock market. This could quite very well happen here. And I can't explain to you how inflationary this is. They're pumping a lot of capital into the marketplace. Inflation is running rampant. What are stocks doing? Ripping through the ceiling. So you think that you have a divide between the rich and poor now here in the United States? You ain't seen nothing yet. It's nothing yet. What we're going to see in the coming years is the devastation of the middle class in this country. The rich are going to get a lot richer. The poor are going to get a lot poorer. Government spending will have to keep up to keep the impoverished from rioting. It'll be so bad. That's what Argentina needs to do now. But at some point in time, this is all going to come to a very, very tragic end. So while I believe that the United States is going to see a recessionary correction that's going to be met with a massive, massive rally in equities in the coming couple of years. Unfortunately, that's going to be hyperinflation. Talking about Weimar Republic, and Lord knows the hell that is going to bring down on our freedoms here and in the West. So taking a look back at the yield curve, if I can find it, the yield curve, which had a very, very bearish month in the month of November, has gapped up in December. Granted, it's only one trading day, but it is indisputably a gap up. The steepening continues. Let's take a look at a weekly view. I haven't done so. That's a pretty nasty hook up. So what do you interpret from this? All you do is take your crayon out. Technical analysis is all about higher lows and higher highs. So the question is, when do we uninvert? And it's when we uninvert, that's when you got to get real, real worried about the economy. And if you're looking for that dip in gold, it's going to probably happen once you get a steepening and an uninversion of the yield curve. Because there's something happening out there. We don't know what it is yet, but there's going to be an event. There's going to be a crisis of some sort. My guess is it's some big bank is going to go down. And the ripple effects that's going to have are going to be catastrophic. So buckle up. Let's do some chart requests. We only have 4 minutes left. I have 3M. We're going to start off with. Let's go to comments here. Yeah, wise move. Wise move. I would avoid too many other good stocks out there. Why need to get involved with those Chinese stocks? Hello, KK. Pat. I own the physical. I own the gold mining stocks, GDXJ, NUGT. I wanted to sell more puts on NUGT. I tried twice. They wouldn't give me a fill. I have options on the GLD. That's my current position on gold. What do you use to buy Bitcoin? I have a SoFi account, and I just have X amount of dollars that leaves my. What I do is this: as a matter of fact, I did a recording on the market wrap. I think it was last Monday. I saw Bitcoin consolidating, and I dumped a whole bunch, not a whole bunch of cash. I keep saying that. I dollar cost average in, but I also keep, like, I'll take, let's say $100. I'll have $100 go into Bitcoin, and then I have another $100 go into, on SoFi, a money market account. And then when I see a good setup on Bitcoin, I'll take that $100 that's been building up in the money market account, and I'll dump it into Bitcoin. So I dollar cost in, and when I see an opportunity, I'll load up on it. And that's what I did last week, and I paid off nicely. So it's simple, SoFi account, and I dollar cost average into Bitcoin. The only thing I'll share with you is that SoFi does not have a wallet. You cannot download your crypto onto a wallet. I want a cold storage wallet. So at some point in time, when crypto gets overbought and I sell it, I'm gonna segue away from SoFi into a company that's going to allow me to download it to a cold storage wallet, because I'm going to want to be able to take that and put it in my pocket. And if I gotta bribe a border guard, I want to be able to do so. Hi, Bob. I will pop the champagne to celebrate gold over 21.23 the ounce. The mother of gold bull markets has finally started. The OCD Fed is taking a back seat. Yeah. Hope BIS let it run without all. BIS is Bureau of International Settlements. Hope BIS let it run without all the fake selling. Well, I think what changed that is that the Basel III, look it up. In times past, banks could use paper gold, paper contracts off the COMEX as collateral. They can no longer do that. They need to own the physical. It's not on the same level as owning the physical in terms of collateral. Yeah, thank you, Pat. Thank you. Yes, please hit the like and subscribe button. 3 years waiting over and getting. I've been waiting for longer, pal. It's nice to finally get it. GDXU is my number one hold after accumulating to. Nice. What what a courage not giving up. That's right. IWM could play catch up. Yes, it can. I agree with that. You're going to get the tax loss selling, but that may be done already. TLT long, yes, you're going to want to own bonds into whatever we're heading into. I own some. I plan on buying more TLT. Meta pulled back. I'll go over Meta, but yeah, Meta had not a good week last week. All right, I'm kind of over already. I'm gonna cut it off at UTSL. I got to cut it off there, guys. Yeah, that's the one I've been looking at. Yes, but I got to find a brokerage. I don't know what brokerage just allows you to download it to that, but I got to find it. Check back in next week. You become a member. I'd stay on all night, but check back in next week. I got to book. Mike, have a great week, pal. All right, let's run through these. We're going to be using TrendSpider, link below. They have a 75% discount right now. So I'll use my discount code and use theirs. Use the link below, though, to head on over there. All right, 3M. Nice bounce back. I think you got to buy this. With the Dow Jones Industrial Average breaking out, I think you got to be a buyer of 3M. We do have a lot of resistance above still. I would sell puts here, but I would get myself long at some form of fashion. Now, we are overbought on RSI for the Dow, so we're expecting a pullback. If we get a pullback to 98.43 on 3M, I would be a buyer. Daily view. We're right at resistance. If we get that pullback, 98.43 is your buy target. I'd be a buyer at that level because I don't think that we're done. ARGT. Yeah, I mean, this is a bubble. This is a classic bubble. There are no real fundamentals here. It's just more. It's more inflation. It's inflation. That's all you're looking at here. And we're right at the upper band of resistance. I'd be a seller here. I would be a seller. To me, this looks like a parabolic blow off top on Argentina. I couldn't buy this. And we are very far extended from the 5-period moving average, EMA, on a monthly time frame. We're going to get a nasty retracement here. So I would be a seller of ARGT. Take the money and run. Meta, if you could believe it, well, it's only one day into the month. It's down on the month. Let's go to a weekly view. Bad week last week. I mean, real nasty. I don't like it. Strong support down at 300. If we get a retracement back down there, 315, 316 looks good. We do have some bottoming tails from last week off of a volume shelf. I would wait for a breakout. Let's take a look at what are the 15-minute charts looking like here? It's trying to break out on a 15-minute chart. So you may get a rally here. I'm not excited about it, though. We're bouncing off of the 34-period EMA. That is a Fibonacci retracement level. Ideally, you get a retrace back down to that 315, 316 mark. Then it becomes interesting. You may want to look to sell puts down at that level if you really want the shares at a discount. And if by chance you get down to 300, that's like a rock solid floor on Meta. If it ever breaks and closes that back down below 300. There's something very, very wrong with Meta. UTSL. Looking very good. So when the 10-year yield goes down, utilities go up. So this is telling you that they're expecting more rate cuts coming. So they're bidding up the utilities. Why? Treasuries are going to be yielding less. If you buy the utilities now, what are the utilities yielding? Go to the XLU. The XLU yield is yielding 3.34%. Not great, but not horrible, especially when you consider that if they cut yields down, you're going to have money leaving the bond market eventually because you're not getting paid any yield. And where they're going to find yield? In the XLU, plus upside appreciation in the common stock. I think this looks great. I really like it. Let's take a look at it on a monthly view. You have a lot of overhead supply here. You're going to get backing and filling. So I would just dollar cost average in. That's the way I would play it. I would not jump all in right now. Dollar cost average in and begin building your position. I think it could be a core position as we move forward into this new, whatever we're heading into right now with the yield curve steepening. All right, that's it, folks. KK, I'm sorry, pal. I'm out of time next week. If you're a member, I'll do whatever you want at any time. But I gotta punt till next week. Sean, thanks for being here. Thanks everyone. Trader Isaac, folks, keep on buying Shark Ninja. You madman. Jody, you're welcome. Have a great night, folks. Have a profitable trading week. Thanks for being here. Like, subscribe. If you want my 5-part video tutorial, my top 5 favorite candlestick patterns, free, link below. Everybody have an awesome week. I'll talk to you soon. Be well.